Good morning, traders, and welcome to BCR's morning market analysis. First up, let's talk about the US dollar. The DXY held steady above 100 after coming under pressure earlier as markets assessed the impact of Middle East tensions and volatile oil prices on inflation and growth. The dollar weakened after several oil tankers safely passed through the Strait of Hormuz, easing supply fears and lowering energy-driven inflation concerns. US officials also confirmed that Iran was allowed to continue crude transport through the strait while efforts continue to safeguard commercial shipping. Technically, the index briefly touched 100.1 before slipping back below 100 and continues to consolidate within its recent high range. Momentum indicators show slowing upside strength, suggesting a consolidation phase. Key support sits at 99.5, 99.4, with a deeper level near 98.8. A move back above 100 could see a retest of 100.5. Next up, let's have a look at crude oil. WTI traded around 95 per barrel after a sharp pullback. Prices fell as ships resumed passage through the Strait of Hormuz, easing immediate supply concerns, while high US production and potential strategic reserve releases added additional pressure. WTI closed down 5.3% down at 93.5, though prices remain significantly elevated after rising nearly 40% since late February. Diplomatic signals also emerged with the US and Iran resuming direct communication and authorities indicating measures to stabilize prices depending on how the conflict evolves. The IEA also signaled it may release more reserves if they're needed. Technically, crude remains above the $90 to $95 key zone. Resistance stands near 99.91 and the psychological level of $100. Support is seen around 91.9 and the psychological level of $90. Next up, let's have a look at gold. Gold hovered around $5,000 per ounce, staying near a 1 month low as traders evaluated how the Middle East conflict could affect inflation and monetary policy. Escalating attacks on regional energy infrastructure have kept energy prices elevated, reinforcing inflation concerns and supporting expectations that the central banks may maintain a hawkish stance. Markets also expect the Federal Reserve, along with other major central banks, to keep policy settings unchanged this week. Technically, gold remains slightly bullish, holding above its 50-day moving average near 59.65 and well above longer-term moving averages. Momentum has softened with RSI near neutral levels. Immediate support is around the 5,040 level, followed by 49.65 and the psychological level of 4,900. A break above $5,100 could open the path towards $5,200. Lastly, let's have a look at the Australian dollar, which rose to around 71.10, extending gains after the RBA raised the cash rate to 4.1%, marking its second hike just this year. Markets are also pricing in another hike in May that could lift the rate back to 4.35. Investors now await Michelle Bullock's remarks and upcoming labour market data for further policy signals. Despite the rate hike, markets' reaction has been measured, with the pair holding near the 71 cent psychological level. Technically, the Australian dollar maintains a slightly bullish bias, trading above the 50-day moving average at 69.69 while consolidating below recent highs. Immediate supports lies around the 70 cent mark, followed by 69.69 with resistance at 71.50 and the psychological level of 72 cents. Well, that's all for today's morning market analysis. As always, manage your risk and happy trading.